I'm hitting the record button. Welcome, everybody. So I just wanted to give everybody an overview that's new to the service on how to use the numbers that are in front of you. And I'm kind of reticent to put the sheet up in here because I'm recording it. But, because I don't want the recording to go out with all the numbers on it that are obvious, okay? So we got a matrix number right here at 2944 in the S&Ps. And let's just use this as an example for today. The green number, the next green number that you saw on the sheet was 2965. All you guys see that? Hello? Yes?
Yeah.
Okay.
Oh,
All
am I
right.
following your mouse? Where's your
No. I'm not putting the sheet up on the screen. I want you to look at your sheet on your desktop.
Oh, yeah.
Okay? All right. So that 2965 is in green. That number was generated in 2017. So now it's taken us a year and a half to come up there. The first time we came up, you notice that above 2943, there's no matrix levels, okay? Only a target. Same thing in the NASDAQ above 7590. The next matrix levels won't be generated till the end of June. And that's across all the interest rate futures, the currencies, and the equity indices. So the next time I get a number is June. So right now we've got ORL day, right? And it's going lower, topping just below a 2-year target and closing back below 2943, which is a matrix level. And all I've been writing is that I need 2 closes above that to trigger another long for the next target. Okay? So obviously we didn't get the second close above it. We mucked around there. We had 1 close above it. We followed through just up to the target, and then boom. So until we close 2 closes above 2 days in a row above 2943, 44 level, I'm not long the market. I'm out. I'm flat. That's it. I'm long. I bought some VXXB puts or calls rather because I was totally weak. And, I just wasn't sure what was going on because it tortured everybody all day long. But again, the biggest takeaway from today is that it was another Wednesday high. Last Wednesday, it put in a high and had a weak sell-off and came right back. Now we have a Wednesday high. So you have 2 Wednesday high in a row, okay? So this is technical model stuff. This isn't matrix stuff. So I just want to go back and show you. Wednesday low, okay? Wednesday low, the last Wednesday in December. The first Wednesday in January, we had the same type of ORH pattern, a Wednesday low. They took it down into Thursday and then ripped it back up on Friday, and we kept on going. So it's, when a market turns like this, it usually takes 2 days to confirm it. But in the meantime, I'm going to go neutral all the spreads after the close tomorrow. I'm going to go neutral everything. I just want to see follow through on this, and then I go neutral to see if this is real or not. All right, so it doesn't matter if it's in the S&Ps, any of the interest rate futures, whatever it might be. From oil, you're looking from one level to the next. And they pretty much bounce from one number to the next number. Same thing in the currencies. like in the euro, 111.79. If you look at that matrix level, which was first support this year, that was the ECB low twice over a 6-month period. So not only is it a matrix level, but it's also an event low that it's picked up. And once they started going through that last week, they tried to run them down to 111. So, they try to go from one level to the next level. And once they start coming back up through one of these levels, you need to take them off. So the biggest takeaway you should have in looking at this is 29.43. The first time up to 29.43, you could have scalped it a couple of times. It was great. The takeaway that you should always keep in the back of your mind is that you can go in a hamster mode and trade it, but it's a closing number. And you should never lose sight of that. It's a closing number. So even today, how many hours today did we spend going down at 29.43 trying to get back up, take it out, and coming all the way back to the opening range and back down again? So, they just tortured everybody until after 2:30 today when, it was they finally just, took it down on the hourlies. So that's what I want you to get. So yeah, Paulie, the next level down is the next matrix level. So the takeaway I want you to give between 29.43 and 28.11, you got 130 points. So you're looking for the first move will be 50% of that. Okay, they have a tendency to go to 50% between the numbers and stop the first time. You follow me?
It was 28.77, I believe, was the midway point.
Yeah, and that was at that 66 to 77 level on the way up, where it kept bouncing around, and once it got above 77.80, then it started gravitating towards 29.43. Yeah, and Sean, and don't trade in the middle. So your highest probability trades are trading at these levels. For RIAs, these are the areas where you want to look to either pair your exposure or put it on. So I guess, today I was looking at Google, which completely failed at its Matt and I were looking at this, earlier in the day. It's not so much the daily. Well, first of all, the weekly looks awful, but it's the quarterly. It's now, not only did it put in a new high by, a few bucks, but it totally rolled over through this high and now it's lower on the quarter. That's not exactly price positive. So look at the distance that this thing can come down and still be good. So I'm trying to put together the board, and I'm trying to use the matrix levels as a guide as to how we're moving from one level to the next. And that's really the takeaway I wanted you to get from this conversation.
Judd, would you like me to suggest the lines, which helped me tremendously, that I draw on my charts now?
Yeah, you have a 29.43. You have a...
I have them all.
Yeah, you have them all. Angelo puts in the horizontal lines.
I used to sit with the matrix sheets on my desk. and I used to get lost in the shuffle. And then one day I realized, well, crap, why don't I just put all of the matrix levels as they accumulate over time? Because I thought of it after a year with you. And then I started putting all the lines in. So I started putting in all of the lines as they occur on my active daily continuation charts so that they never go away. And so all I have to do is click my chart for the NASDAQ, whatever, gold, bonds, oil, currencies, it doesn't matter. And I can see exactly where they are without having to figure it out from the sheets on my desk. And that changed everything, because then I could see it instantly and
Yes.
know and plan out my attack.
Yeah, so
I highly recommend it.
Yeah, and it's a great idea just to have colored horizontal lines on there. They're just going to be your static bands. So anytime it gets anywhere close to one of these numbers, in whatever you're really interested in trading, you know, it helps. I mean, here, one of the guys was long some Aussie from this day down here, okay? And my problem is not that it wasn't a good low, is that it never gave you the reversal back up. So if you're trading currencies and you're trying to trade between level to level, you have to look for at least 60 to 80 points. Yeah, and you have to pay for your trade in the currencies at 60 ticks. And then at 80 ticks, at 80 to 85 ticks directionally, you know, it'll give you a turn back, you know, one way or the other to confirm the low. We never got confirmation of it. And I pointed that out to that gentleman a couple of times. We weren't getting confirmation of higher in the Aussie. But it was, you know, he did the trade in a great spot, but it never got high enough. It gave him the 60 ticks to take his money. You know, yesterday it went up to 70.69. It was 11, 12 ticks shy of putting in the reversal on this point and figure back up. And that tells you something about what the market's doing. So just remember, they're quarterly numbers. If it's all green, like in the S&Ps, I don't have anything above 29.43, and the next time I'll generate a number is at the end of June. So the green numbers are targets. That's all they are. And they were targets generated in the indices. They were targets generated either at the beginning of this year or in 2017. As in the S&Ps. It was a 2017 number. And I got that number confirmation. And I'm going to go show you these again. Oops, there we go. And this is stuff you can't pull up on a Bloomberg. You know, you're going to get a line chart. You're not going to be able to see anything. You notice that we went up and we just made higher highs in the S&P 500, right? And here's where we broke from. And it looked like, you know, the last few days, we were going to try to stay above this level, this ORL level in the spread. And start up, because there was plenty of room in the spread to go. But we're not getting confirmation now off the first of the month. The spread's rolling over, and it's rolling over at a retest level. And it's also matching, you know, the old high. So you've got a lot of things that tell you you don't want to be long here. You have to let the market play out a little bit. All right. So when this high got taken out, it got taken out in October of 2017. When Ira and I were at that Top Step Trader thing with Crudelli. And it came back once to retest the level and took off. This is when I generated that upside target at 29.65 in the S&P futures. And I confirmed it off the spreads. So nobody looks at these spreads. Nobody on Wall Street, nobody looks at them. Ira looks at them, I look at them, and that's about it. And actually, Ira was the one who got us all looking at them. So I'm going to put up the NASDAQ. See, the NASDAQ was acting a lot better, and it came up basically halfway up to this breakdown, into the bar. And the NASDAQ looked like it wanted to just keep on going. But alas, off the first of the month, a Wednesday high, this is breaking down. So, this has got room to come down. So you don't want to be in a hurry with any of this. And you have to wait. It'll take another day, maybe two, before direction really starts going again. All right, now I'm going to take us to this other screen because I'm trying to get you guys to see how I put this together. Here's 100 by 3. So from here to here, that was 100 S&P points. That was the March break that Matt caught and got out on the lows. And now we've come back up and ostensibly double topped. Here's the 50 by 3. This one takes 46 points for a reversal. We could get that tomorrow. This will be the first one to turn. So that's, and you got the turn down and the breakdown, under 35, 36 today on the short term on the 25 by 3. So the idea of the work is that what you want to do is you want to take the matrix levels, you want to take the point and figures, and I take the risk spreads to tell me if it's real. Now you've got an ORL day in the S&Ps. You got an ORH day in the VIX. All right. So there's your there's your ORL there. There's your ORL here. Here's your ORL in the NASDAQ bonds. And the Russell bonds just look like it's a normal corrective type phase. So it's going to take another day, maybe two, to see if, they come down to some level and turn around and come back up, or it's a real move. And that's why it takes more than one day to confirm new direction. It takes a couple of days. Are you guys with me on this?
Yeah.
Okay. So, and that's why I'm always talking about the midweek shuffle. If you're going to get a directional change, you're going to get it on the midweek shuffle. You're going to get it on a Wednesday, Thursday dance. And today you got an event day with a Fed meeting, and it's a perfect time. It was just the most miserable turn in the world. But you got it. And, I'm long I'm long the VXXB because I never got the S&Ps anywhere where I was even remotely comfortable. But, at least I'm articulating the direction with an instrument. And that's the idea of trading. If you don't trade one instrument, find another one that you can articulate the trade with. And that's pretty much what I do all the time. All right, does that kind of bring everybody around, to what I'm doing and my methodology? Matt, you have anything to add? Angelo?
No. I was just going back and forth with Sean, and just to clarify, matrix levels, I use, horizontal dashed lines, except the quarterly pivots, whatever is the active current quarterly pivot, I use a solid line with the date range for the quarter.
Okay, so in other words, you're looking for these, anytime you get a matrix level, like yesterday, the oil went up to 64.72. Good example. Went up to 64.72 and stopped, right? If you're going to trade at the matrix levels. If you were long, you should have been out there. The high was 75. Okay. And I haven't been trading the oil. I haven't been trading the oil for ages. Now it's going to come down. The next matrix level that I'm looking at is at 62.07. All right. Which will take out this low, which was, I don't know, it was a 200-week moving average that it bounced off of. Jack, I think, caught or the 50-week moving average. Jack caught a nice trade off of this back to the upside. But that's where all the stops are. And that's where they'll, that's where all the sell stops will be, and that's where they'll trap new shorts. So that's an exit zone. Okay, Paulie, I'm not sending out all my matrix levels. I mean, you don't need any levels below the ones that are already there. I mean, every quarter I start out with a clean sheet with a quarterly pivot, one support level, and one resistance level, because you can't process any more than 3 numbers. I mean, most of us can't trade 1 number, let alone 3 numbers. So start out with 1 and just focus on it. Okay?
Paulie, when we get down to 2784, we'll have new numbers to go off of.
Yeah, I mean, if we get down that low, I'll update them. Don't worry about it. And if there's something that I missed that I don't update just because I haven't been paying attention to it, all you have to do is ask me. And I'm happy to do it.
That's rare.
Yeah, well,
Paul, but just, don't worry about it. When numbers start to come into play, Judd's pretty good with sending out updated numbers.
Yeah.
He's not going to leave you hanging until the end of the quarter.
Oh boy. All right, so that's just basically as simple as I can make it. You're looking for one to the next. So in the currencies and the oil, I use a 25 tick stop on the level, because remember, they're closing levels. So if you want to lead off on it, you got to use like a 25 tick stop. Okay? Either way. In the S&Ps, you want to use 2.5 handles. In the NASDAQ, you might have to use, I don't know, Langer might know, but you might have to use 10 or 15 handles.
It would be 10 or 12 points.
Yeah. Because the noodles overrun everything. So you got to give it. Yeah. Look, financial futures quarterly. So that's how the futures are constructed. And that's just how the world runs.
And the matrix levels, everyone, are especially helpful if you have some sort of a fundamental view, that is 2 to 6 months down the road. You use the matrix levels as your cue that your thesis is coming to fruition.
Yeah, it was interesting. Rashke was talking about her hamster trigger in the copper today. Well, if you look at your copper numbers, you were never long copper.
Yeah, I looked at that too when we were talking. I did look at that when Linda said that. And I grabbed the sheets and I looked at that. I couldn't believe it.
Yeah, you were never long copper. And I haven't been talking about copper because I thought copper was garbage forever. And now now that we're looking at it, I got to put another copper number in there.
She was also talking about the beans and, the beans, well, whatever. The beans weren't any good either. They were on their ass.
Yeah, and you don't want to look at the beans until next week.
Yeah, Abby, we'll get her in here. I had her in the Discord room earlier. We'll get her. We can definitely get her in here. Sure.
Joe, the next level in copper, I believe, is 267.
Okay. Well, there you go.
Yeah. And there's your cue for China.
Yeah. That's why I just wasn't getting sucked into anything I saw today, in the room. I just kept saying, I'm not doing anything. I'm not doing anything. And it wasn't until the end of the day where I bought some of those, I just thought, well, I got to take a shot at being short on the Wednesday high. So I bought the VXXB calls. And then like a pussy, excuse me, Christine, I scratched them. And then I went and bought them, 8 ticks higher and said, I got to have something on.
Matt, we're never going to hear the end of this.
All right. So, yeah.
I swear to God.
I do it. I do it all the time. I'm a hamster. I can't help it.
I thought about that. I was thinking that when he said, it tickled me because I was thinking that, oh my God, how long do we have to hear this for a week? It was so funny.
Yeah, so that's basically the game of the work, and it keeps you out of trouble. We've known all week that you don't want to buy strength in the 29.43. I mean, every time it went up there, it was, it was a fade. And then finally yesterday, late, it held above it, and you got a little wiggle to the upside. But, we knew, because I've had that target at 29.65, and Matt and I had talked about this a while ago. I mean, it could get above 29.43, go to 29.65 and still reverse. And that's exactly what we got.
And that's why it was so aggravating, because it was almost elementary, and I just didn't execute it well. And there's going to be days like that.
And sometimes you just got to believe and close your eyes and walk away and put a stop over the high. And that's a hard thing to do because you hadn't been rewarded doing that.
Yeah, I was just going to ask Matt, I guess when it broke below the opening range for the day at 29.43, that was the big question in my head. It's like, okay, God, I don't want to shorten the hole, but it wasn't easy. And especially since you're selling almost a 20 handle break, and you can't get any trade location on it.
Yeah. No, actually, no.
I was in there, but I was clicking away. I was like a hamster. It really wasn't
that hard, and that's what I was. Angelo had said that earlier, and Judd corrected him and said, no, Matt's got a system that of execution that works, and that's right. So it really, that's the aggravating part, was that once we came through the opening range, I wasn't short. Okay, fine. I was trading. I came in long above 43 because once we got above it, that's it. I was long, and I the way that I traded it was I traded it well, and then I protected my longs by getting short under the opening range, and that took them, well, not the last time. And then what really aggravated me is that underneath 43, it kept bouncing around that area. But,
yes,
it was noise. It was all noise. And I gave in to the noise. I didn't trade the levels. I let the noise get me aggravated enough to say, well, the stops around the matrix levels in the S&P is 2.5 points. 2.5 points. That's enough to keep you out of the noise. Period. And we didn't get above the matrix level, I don't believe, by 2.5 points. We did get below it by 2.5 points, but not above it.
Well,
And
yeah,
that's
but
why
it
it's-
went, the first time it went down to what, 37 or something, and rallied almost to 50 again, or 51?
Yeah, 48.
Yeah, so they jerked you around a few times, and in it here, if you just looked at the if you looked at an hourly, you know, it came up into the hourly averages and just couldn't get going the other way, and then finally gave it up. But that wasn't an easy trade if you were watching it.
Not if you're watching it, but look, the levels are the levels, and the levels are the levels, and that's my point. And that's what that's what the whole idea of today is. Now, it was an event-driven day, and I think that's what got me a little bit messed up. First was having Linda Raschke on, and then we had the Fed right away. So I wasn't real focused going in, but the levels are the levels are the levels, and that's what Angela was saying earlier. You trade the levels. And then, or like you said, Judd, just now, you put your stops in, you trade the levels, you put your stops in, and you walk away. And you pay for your trade, you manage your positions properly, and that's it.
Yeah.
That's
And I didn't do it either. So, I'm just as guilty as anybody else. Now, if you look at this 100 by 3 point and figure, guess what the reversal number is going to be on this? It's going to be half, but the 50% between those matrix levels. Right around 28.77. That's what's going to give you the reversal back down here to relieve all the pressure, the directional pressure in this thing. And then you're going to get an all new move that starts. So it'll be interesting to see if we could actually get that low.
Well,
There's an old target at 27.84. So there you go.
what about 29.10? That's the quarter way. Matt and I talked about that. Does that, on your point and figure, does that look like anything? 29.10.
forgot about that, Ben.
Yeah, but
Matt, what are you gonna do at 29.10?
Nothing.
Nothing.
Actually,
That's nothing more than the spot where the 50 box reverses.
yeah, that's all that is. That gives you the reversal on this to give you the pressure release, like you got down here before it took off.
So look at, underneath 29.16, or I'm sorry, underneath 29.26, we've got a reversal. And as long as we're underneath 29.26, we're working from the short side, especially if the SPU bonds are underneath it.
Yeah. So you're trading this low, period.
Yeah.
Okay.
Absolutely right.
I put it back on, so I'm just wondering. So 29.26 is where the SPU bonds cross. Okay. And we're short underneath that. All right.
Yeah, and that's it. And now we wait for the open, and we continue to trade. Look where we closed just now. We broke 10 points. We broke 10 points between 3:30 Central and 4 o'clock, where they just closed them.
Yeah. And they're weak. So, and now you got Asia, who's been closed, is going to come in tonight, and we're lower. And everybody's been buying China all day.
For sure.
So this will be interesting to see how it trades out, because now they got everybody trapped long.
Right. Yeah.
But what do the spreads look like here?
Well, I just went through them. Here's the NASDAQ.
No, I know. I know, but now everything's closed.
Well, now they're closed. So they'll
Oh, there
open
they
up.
are. Okay.
Yeah, they'll open up in another 50 minutes. You can see we're right below the 21 on the SPU bonds.
Yeah.
We're coming down to it in the NASDAQ. We're at the 50-day in the Russell bonds. And the Russell bonds, this is not a topping pattern. This is just rejection at its 200-day. So again, you've got a global macro playbook to trade at the levels and the 50% of these levels. If it's green and something's going to new all-time highs like the S&Ps and NASDAQ are, there are no matrix levels, because you have to wait till the next till the quarter ends to get a new set of numbers. So whether the new set of numbers is above 2943 or below, that remains to be seen. You just trade, you don't worry about that. You just trade the levels you have in front of you and the targets. All right, does anybody else, excuse me, have any other questions? Because I'm more than happy to answer them.
Holy cow. I can't believe you guys aren't just like shooting questions at them.
So Judd,
Jack.
very, very simplistic view of this. I'm trying to break it down for myself in the most simplistic way. These levels are their targets there, and they are levels that, as you said, let me just look at my notes. They're closing levels. You can scalp around them, but they're closing levels where essentially we're neutral at that point. We're waiting for 2 days of closing either side,
Right.
to give us an idea of the direction, either upside to the next level or downside to the next level.
Right. Exactly. That's it. I mean, that's the whole game. So the first time they come to a number set, you can scalp them. You can short-term trade them. But if you're going to long-term trade them, you know, you have to wait for the second close above 2943. We did not get it. Simple as that. No confirmation. Wednesday high. You know, everything just wet the bed. Yeah, and now I'm neutral. You're neutral to selling rallies right now, and with a bias to sell rallies, you know, over the next day or so to see if we stay under 29.26, you want to be selling rallies.
I think I've pretty much got it.
Okay.
Based upon that you know, putting it as simply as I possibly can, you know, 2 closes above or 2 closes below gives us an idea of the direction to which level we're going to.
Yeah, and then these point and figures, you know, this was last September we came up here. Okay, so it's been a while since, and this was the December low. I mean, this was just a one-way move. Now I think you're going to get some back and fill on this chart, and it wouldn't be anything to get a little back and fill on this one. But you need some back and fill on these longer time frame charts to confirm lower. That's all. You know, right now everything shows lower, but I need to see confirmation that it's going lower. And, you know, I let off like mad. It's a Wednesday high. Why not give it a go? So I gave it a go. If you're going to get a trend change, it's going to be on the midweek shuffle or on a full moon on a midweek shuffle.
So to address the half back between the levels, so let's say that we stay below 43 tomorrow. We close below 43 tomorrow. Should we expect a release to 77?
Well, that's what I'm looking for, but we need confirmation tomorrow and a Friday that we're going to get it.
Okay, got you.
You know, you need to trade the markets the way Matt trades, level to level. Try to get your runners on and trade the direction. And right now the direction shows we're going lower. Well, you know, show me that we're going lower. You know, we get back above 26 to 30, it'll start going back the other way and screw everybody again. So that's why, you know, you always need 2 days of confirmation. It's rare that a market will change in direction in one day. Okay, guys, anything else?
No, I don't have anything. I always need some time to chew on everything. So
Well, and this is being recorded, and I'll send it to everybody as soon as it loads on Zoom.
I mean, I guess like practically, like yesterday when at 3:00 we were above 29.43, and Matt was really smart to take a crack at it towards 65. But it always gets a sense that the levels, we don't have a lot of time to set up, so you have to do what Matt does. It's a beautiful system. I mean, is that fair to say, Matt? You here?
Yeah.
Yeah, I'm here. I'm sorry. Yeah,
Yeah.
Ben, I'm here.
Because like, my instinct yesterday was, oh, we're at 29.43. We spent all day below it, and I'm waiting for confirmation, right? But then you put it on, and then it was the same thing today on the downside. I'm like, I'm wondering, need
Yeah,
confirmation.
but see, yesterday when they went down to 20, here was the reversal right there yesterday. Okay, on the 25/3,
Yeah,
it gave you the short-term release so it could go back up.
yeah,
And that's why when it got down there and it was down there at like 10:10 or whatever it was going into London's close,
Mhm.
and we're going down. When markets are going to maintain direction, most of the time they'll go one way into London's close, and then the U.S. will take them the other way after they've rinsed them all. And
Yes.
that's been the nature of the bull market all the way up. You'll
Yeah, I
get
have-
these days
yeah,
where London will go, they'll let London sell it off. Then they'll come in and just at the end of London's close, they'll suck up all their MOCs and then they'll take it right back the other way. And that's what you saw yesterday and today.
You guys, I can't tell you how important this is for every trader in here to learn, listen to, and understand. And if you don't understand it, that this is kind of similar to the meetings that we would have after the markets or even before the markets when I was a new trader, and so if you don't understand something, ask, and if you don't, or if something is unclear, ask, from either from the technical aspect of Judd quarterbacking it all, or from an execution standpoint, on a short term, in a short term way or in a longer term way. And this is worth more than the price of admission. Just this conversation alone.
It tells you how to one, pick out a level, a side, and it gives you a template to see what's real and what to look for. And every time we get one of these highs like this, what happened in last year, the 1st of October, had the same type of setup. Okay, same thing happened. Now we're getting it again. So you're going to see this stuff over and over and over again through your entire career. I mean, these types of setups are repeat all the time. It's never different. It's always the same.
Hey, Judd.
Yeah.
I had one quick question. So I've been toying with the idea of playing the matrix levels with wider stops. Right, kind of like what I used to do. I was never really much of a short-term trader. I always took longer-term positions and risked like a quarter basis point, right? A quarter of a percent. So, assuming we get a daily close above or below, do you recommend playing the matrix levels from that perspective, meaning risking a little bit more and kind of letting it play out? Because today I tried to play 43 and just got whipped the fuck around a few times. Intraday. So it's kind of tough to trade that level with a tight stop intraday is my point, because it's so important. You tend to see bigger swing.
Well, yeah, but that's the condition of the market and where it's come from, Matt, because, you were trying to initiate on a 20-point break, and the general, when the S&Ps are moving, it's, 20 points is a usual day, right? But you're trying to sell. You were trying to initiate the first 20-point break in a bull market, And the bull wasn't having anything to do with that. So it kept ripping your face off till the end of the day. That's why I wasn't doing anything.
So then maybe even if it is intraday, do you just have to give if you're going to play a matrix level intraday or not, you just probably have to give it more room to breathe. You just can't be a tick or two on either side. It's got to be 10 points and just accept the fact that it's going to be a bigger move, so you take more risk.
Yeah,
Well-
I mean, if it came up to it the first time, right, after it's rallied 100 points, you can sell 43s and get away with it.
Right. And that was yesterday.
That was
That
yesterday.
did it really, really, really well. Today was, fuck me running, for an hour.
Yeah, well, it jerked everybody around for hours.
All right, so it's not out of reason to then say 43 either intraday or not. I'll play it, but I'll give myself a little less size, so I'll get less leverage off. But I can just wrap it around a 15-point stop.
Yeah, but I mean, it wasn't a level to overtrade today just because of what it was.
Okay.
You've got your trade location on the opening range.
Right. Yeah, exactly. I should have just been committed to selling the bottom end of the opening range, and I would have been solved for the 43 level. Doing
Yeah,
that.
and you wouldn't be over. Then you wouldn't. And this is what Pax was saying too. It's the process. So then it gets down to 43, and you're over trading the level.
But I guess today is an aberration, given that it was a Fed day, so it's kind of tough to be short against a Fed day when they're not going. So but assuming it wasn't a Fed day and the range and the opening range was above it, then yeah, totally. But it was more complicated today, given it was an event day, right?
Yeah, but it's an event day, but it's still a midweek shuffle Wednesday. Doesn't matter. It's Wednesday. For whatever reason, it's the midweek contra trend stuff. So if something's going to change trend, it's going to do it on a Wednesday. Now, I mentioned this last week too, in the beginning of the week. We had a Wednesday high last Wednesday, but it didn't get any traction to the downside and turned around and came back up. Gave you a 25-point break in the S&Ps and came right back up again. Now, you have a Wednesday high and it looks like it's the real deal.
It didn't help that the ES was in the opening range for the third time in the afternoon.
No,
And it broke above the the May open, 29.55, like 3 times. So, because we haven't had a setup like that, and I can't remember how long. Three
I mean,
times
one of my guys that's a market maker, okay? He covered, he's been shorting S&P futures up here because he can't trade stocks because he's restricted. And, he called me up a couple of times. He said, well, I'm trading around a short. I don't really, there's nothing I can say to that. Okay. He's got a bearish bent and he doesn't, in his view I don't think it's going to close the second day above here. And he was just looking at that target at 29.65 saying, I think everything's overdone in his mind. And if it closes over there, well, I'm just going to puke the rest of my shorts. That's it. So, everybody's different. So you have to, and everybody has a different risk tolerance.
I think what I missed was, and I know it's like I didn't know it, but I'm thinking above 43. I'm going to be like the second day will most likely close above it because they didn't do much of anything. So I was looking for more upside, but
so was I.
Well, so was I, but that's why I didn't trade because I wanted it to show me that it was going to go.
yeah,
I mean, half of me thought 55 was a great level to break out. Yeah.
Yeah, and that's part of being a trader. I mean, if you want to lead off on something, then you have to decide where you're wrong. And you're selling a 20-point break in the S&Ps, into the matrix level. Well, you're not wrong until it gets back above the high of the day, or the high of Globex. Really, the high of Globex at 61.25. You're not wrong until it gets up there, and then you still have 29.65 that it's got to close over to get going.
Right. Yeah.
So it becomes, it's like that becomes in Matt's world. How do you manage it, or how do you articulate it and keep it?
Yeah. I used to think more in line of that, but with Matt saying we don't call tops and bottoms, I didn't want to scratch that thought. in my
Well,
head.
the only times you do it is on a Wednesday.
Oh, okay. Okay.
You know, it's a
And
Wednesday.
Friday afternoons we go long.
Yeah, it's a Wednesday,
Yeah.
Thursday, midweek shuffle dance. I mean, that's it. So if you're looking for you know, extremes, especially in the oil, you get them on Wednesday. You know, with inventories every week. With the S&Ps, you know, technical miles guys take 2 weeks to turn. Okay, 2 weeks. They don't just do it in a week or a day or two. It takes 2 weeks for the model to turn. So last week, excuse me, you had the first Wednesday high. Now you just had another Wednesday high. So next week, the technical model will still be up, but it'll be up and threatened. And next week it can turn down on a fresh. So remember, it takes 2 weeks for the trend to change. It doesn't do it in a day. So that's a lagging indicator. That's why you get all these Wall Street analysts, and they're always wrong because they're looking at lagging indicators. You know, Matt and I don't look at lagging indicators. We're looking at the chart in front of us. So does Ira.
That really drives me crazy. That's all the VWAP and VPOC stuff. That's all history. I don't care about history. Oh no, I do care about history. But I said that the wrong way. But you know what I mean. It's history.
Yeah, it's the here and now. It's not.
Right.
Yeah, and all those lagging indicators. That's what they are. They're lagging indicators. That doesn't help you.
You know what, Joe? This is all really, really helpful because now that I'm actually thinking about it when I'm not buried in the fucking screen and during the day, it's like we had 43 below us, right? We had a tight opening range. What better way to pre-position yourself for potential break than at 53?
That's why I'm ready to hang myself.
Well,
on the
I want
filter
to
tree.
hang myself with my mouse fucking like again. It was looking back. I mean, look, it's a helpful exercise because now we know, right? But
Yeah, well, it always happens.
Yeah.
And you're going to see it again and again and again. And that's why, you know, I decided, especially for the new people, figured this is going to be a really good exercise for everybody. One, we were lucky because we had a major, you know, we have a major topping pattern right now in the indices, you know, at a matrix level, you know, at targets. And now we're going to see tomorrow and the Friday whether it's real or not.
so I guess in and around these levels, I mean, the opening range trade just matters that much more because we get acceleration in and around 43.
Yeah. You know, now what happens if we and here, well, let's look at the, here's the pit. So now the pit chart is going to be big. Okay. So guess what? What's the low of the pit? The low of the quarter is 28.57. We get our first reversal on the 100 at 28.77. So if the market is really going to go correct, we're going to come back down into here.
Oh, that is so important.
So this is when you look at the day sessions, okay? So you can see the gaps, the breakaway gap from the beginning of the quarter and the gap and go. So now you see in your mind where it could actually correct to if it wants to correct. And that's why we're going to be focused on 29.26 over the next 2 sessions. Because above it, they're going to run all the shorts out again. And if it gaps lower tomorrow, then you got another program starting here. I mean, I don't think the bull market's over forever. I just think, it's one of these times where we're going to get another move the other way.
I think the bull market's over every damn day, and I've been long. I've been long the last few weeks.
These comments basically said that, they're not, the rate hike's not coming, front end sold off, the back end rallied, and everyone just got to adjust to that, right? I mean, a rate cut kind of got quasi baked in with it.
Wait till you read notes from the underground tonight. Oh, this will be good.
I'm looking forward to it, actually.
Well,
Ira
Jim-
hasn't traded all day long, and he might have sold them at the end of the day or later in the day, after like 2:30. But
he said the whole thing was inane.
What, Angelo? What? I missed that.
inane,
I
stupid.
I pinged him earlier and said, commented about, Powell's balance sheet misstep. And he pinged me back and he's like, yeah, the whole thing was inane.
I can't wait to read the fucking. I can't wait
Yeah.
to read it.
Judd, who was that you were speaking with before?
Matt Cicero or Ben?
Oh, maybe it was Ben. From a longer term perspective, which is me, there will be many times where the markets will literally pin the matrix number. And then there's going to be other times where it'll miss it by a point or half a point or 2 points, and depending upon how long you've been long, right, how many points you've been long, sometimes you have to make a judgment call about, okay, I've been long for 20 points. We're within 1.5 points of the matrix level. Do I want to hang on for that next 1.5 points, or do I want to take my money now? Those are the challenges that come into play sometimes. How long you've been long or short, and whether or not you want to wait for the matrix level to literally get tagged, which it does most of the time. It will literally get tagged.
Yeah, pretty much. And sometimes it'll come up to him a little short, and then it'll break somewhere, and then it'll come back up to it. But it generally, trades it.
Yeah, but the whole point, Judd, that I'm trying to make is that it gives you trade location to exit and enter.
Like the first time when we closed above 28.11, which is the quarterly pivot in the S&Ps, okay? It went up 50 handles. It went up to 66 the first time and had a pretty good break. And then the next time it went up to 77, and Matt was asking me, Matt asked me, he said, do you want to sell them here? It's 50% between the numbers. And I said, no, because the market structure at the time just told me it was going to keep on going. So we didn't do it.
I mean, oil's been doing it matrix to matrix, like intraday.
For months.
Yeah.
But
Yeah, and you don't trade the oil unless it's at a matrix level. Forget about it. I mean, Friday or whenever Jack did that oil trade, it's at the 50-week moving average, and it was a really nice trade for him. And I think he got out at a matrix level. It went up to the matrix level and let him out.
That's the way you do it. Never in between.
Yeah.
Because you don't know. You're in between. You're literally in no man's land. Unless you have a PAX process. A very tight process like that.
Assuming you take a Celsius.
So, Bruce, are your eyes rolling up in the back of your head, or are you following us?
Well, everyone should not forget to go back and listen to this tape multiple times until you get it, until it sinks in.
Yeah, that's a good tip. Thanks.
All right. Anybody have any other questions here? Because I think you got a lot to digest, and then I'll just cut this thing off here and send it to everybody when it processes, and send you the link, and then you can revisit it for a few days, and then you have questions, and then we'll come back to them again. We could do another one of these in a week or whenever you want, but at least now you have a framework for understanding and what I'm trying to do. And what I'm trying to, I'm trying to curate the board for you and quarterback. I don't do all the trades. I can't. I don't know. Abby does stuff, and he'll send me something. Angelo does stuff. He'll send me something. People are doing all sorts of things in all sorts of different ways. But the process and the methodology doesn't change.
Pulling that pit chart back up one more time. So I can
Which one?
pit chart displaying the gap. S&P.
Where are we? There we are. Okay. All right. So you got a gap down here at the quarterly close or the quarterly opening. On the quarter, we just took off. I mean, because it was that Friday. I think it was a Friday or something. This was the bottom of it. The end of March.
You're on the June. You're on the June. You're not on the continuous contract. That's right.
No, well, that's yeah. So I was just trying to show you the pit daily. All right, so there's the continuation. Okay, basically the same thing, but you can see the gap. Now the question is, does this pattern is this another false pattern or is it real? So as long as it's, look, if it gets back above 26, I'm going to still look at this. I'm going to still look at 43 again to see if it comes all the way back up here and then rolls over. Until it gives me two closes over 29.43, I'm not getting long. It's as simple as that.
So Judd, the playbook as I wrote it out is 29.26, 28.74, and if we break that, then it's the pit gap at 28.57.
Right.
That's the playbook.
That's the playbook. That's a downside playbook. Doesn't change. Will not change. You can ask me every single day, what's the next number? The numbers won't change.
And then within those three numbers, you can dick around with the point and figure charts.
Yeah. So just, the beauty of the matrix sheet is they're not going away, these levels. And they're always there. Whether we're going up or down, they're always there.
Judd, have you talked to them about how the markets have memory?
Well, that's a big part of this, and I'll mention it again right now. The whole premise is that markets have memory. They always come back to these numbers, and they always show you the numbers again at some time in the future. Like pit gaps in the S&Ps. There were pit gaps in the S&Ps. I remember some of these guys from RJO get on TV and go, well, there's a gap. It's going to come down and fill the gap. And they were saying this in the 90s. Well, it only took until the 2007-8 crash before it finally came back 20 years later and filled the bloody gaps. But it filled them only 20 years later. Don't get married to that stuff, because it's how it does it. And, and how the market's set up. But these levels never go away, ever.
Yeah, forget about all those books that talk about modern portfolio theory, efficient markets, random walk. It's all crap. It took me a long time to realize and wrap my head around the fact that the markets have memory. They remember this shit. I don't know how. I don't know why. It's unbelievable. But Benoit Mandelbrot in The Misbehavior of Markets, he talks about how the markets have memory.
Okay, so we're down here in the euro. Here, let me show you this chart.
And nobody understands that.
There, I don't want a weekly. I want a yearly. Okay.
Judd, while you're pulling that up, we talk about this all the time in Discord, is that the markets have memory, and even as simple as the opening range. The market remembers the opening range to the
From
point
forever ago.
Yeah. And that's how old opening ranges become my targets. You know, people will say, how in the hell did you get that? Well, it's an old opening range.
And you remember it because you've trained your mind to remember them
That's exactly right.
without looking at them.
Judd, the Aussie opening range of 111, was that from 1968?
No, it was January of 2000. January of 1974.
1974. Okay.
Exactly.
Because I literally put that on my chart. I drew the line.
Good.
Yeah. Oh, yeah. I fucked up that trade too. It came all the way back up here, and I missed getting filled by 20 ticks.
Judge, show him the
There's the opening
2014
range right there at what was it, 111? Yeah, it was at 111, and I had an order there, and this high was 110.83. Opening ranges. It doesn't matter if it's an IPO or whatever it is. Opening ranges. Peter, you can always fade the matrix level the first time, either up or down to one. You'll always, it's a high probability price rejection level. Okay. Especially if it's gone a big distance, like here. Here's a good example. January of 01, we had 100% rally in the Aussie dollar, right up to the opening range. It rejected it, and it took 2 years before it finally gave it up, but it never went above it. And that's why I was pulling up the euro, because another 100 Howard. This was an unnegated cycle low. Well, this was the old D mark in 85. This was the Plaza Accord. So that's why when you're doing currency work, if you're doing a fib, here you go, guys. You don't do it from here. You do any fib in the currencies, you do a Plaza Accord fib. Okay? That's where IRO was getting this 125 level 2 years ago in 2017, where the euro was down here. And he goes, well, I want to sell him. He did that thing in that interview, a Top Step Trader. He goes, yeah, I want to sell him at 125.5. And he just came out with that. If you go back and listen to that interview, and we were trading at 106 at the time, and I'm thinking to myself, well, I wonder how we get from A to B. That was going through my mind, but when we were down here, everybody in the world was trying to buy dollars, thinking we're going to 100, we're going to 95, Goldman, every one of these mutts, okay? But you know what they didn't have? They didn't have my old cycle sheets that had cycle clusters in here that said there was no freaking way we were going any lower. None. So, some work is, you guys have never heard of it. You've never seen it. You didn't pay, over the years, I probably paid $300,000 or $400,000 for that work. That's why this is the same type of work that, I got riled at Matt about, because I know how good the guy was. And there were only 2 or 3 people in the world that even had the work. And this guy is such a nutcase. He scrubbed his presence from the internet. He doesn't even have a presence on the internet. You can't even Google him.
Are you talking about Howard?
Oh yeah, can't even Google him. He doesn't exist. It's unbelievable. But anyway,
like Bernard Connolly now.
Yeah. So
Judd, let's have another laugh. Let's take a look at your your resting cell order at 140 in the oil.
No, it's 116 and a half.
Oh, 116 and a half. Okay. Sorry.
Hold on. Yeah, I've had a resting cell order for years. It never got there. This was from, hold on. From 08. And it's, I don't know, I think it was from September. It was a quarterly level for September. And we went out at 116 and a half. After the close, they took the oil to like 128 and a half. And they just squeezed everybody because every tanker in the world and every storage facility in the world was full of oil. And nobody could take delivery of any more oil because they had no place to put it except their freaking bathtub. And they went up there after the close. They squeezed everybody on the delivery. And then we gapped below 116 and a half and never saw it again. Yeah, this high, 114.83. I tried to sell it in 2011. I tried to sell it in 2013. I tried to sell it in 2012. I just had resting orders there every year. I don't know if it'll ever go back up there. But it's one of those numbers that just doesn't go away. And if it ever gets back up there, it's going to be a sell the first time up. So anyways, this kind of a big digression from what we're doing, but the point is that the numbers don't go away. All right, anybody else? And then I'm cutting this thing off. I'm having,
Thank you, Judd. Have a good night.
okay, guys.
Ciao.
All right. Thanks, guys. All right, now I'm going
Thanks,
to
Judd.
stop
Thank you very much.
recording.
Is that all you got to do is just say stop recording?
Yeah, well, I got to remind myself. Yes, do you want to stop?